You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Happy Hump Day, July 29th, 2020. I hope you guys are having a fantastic week as we continue to meet here as a family to keep up to date with what's been going on in Toronto real estate. We are #1 in iTunes, Spotify, and Google Podcasts for that very subject. And we're having a lot of fun keeping up with the news, trying to figure out where there are opportunities for our investments. And we have wonderful guests and audiences that we can talk to. For example, today we've got Gary Hibbert coming on the show. And that was actually me attending his podcast, but I wanted to share it on my platform with you guys as well. So keep an eye for that. That'll be hitting podcasts tomorrow morning, but it'll also be on YouTube with video today. So I'm so excited today. We've got some great content lined up. We're going to talk about what's the plan to save Canada from the looming deferral cliff. I'm not one to read novels, but I'm more of a news guy, right? But I was reading this beautiful novel. It's called Don't Fall Off the Cliff by Eileen Dover. And then we're going to transition into asking, are average rents coming down everywhere? Or is it really specific segments? And I've read 2 blog TO articles. I saw one about a week ago I'm going to kind of mention what they said, and I'm reading another one now. And they're the same news source, but talking about completely different things. And I want to show you what the media is saying and try and formulate our thinking more circular. We got to see all angles here. We can't just jump, because if you were to dive into either of these articles, you'd be completely sideswiped. And it's funny because they're pulling their research from the exact same source. You'll know what I'm talking about in just a minute. And then we're going to finish off talking about condo projects. Are they hurting? Are they offering deals with COVID discount? Oh man, but we're having a lot of fun here, and we like to laugh, and that's how we do. For example, pickup line. You guys remember that? Speaking of deferral cliffs, you guys remember that pickup line? Did you fall from heaven, or did you fall from the cliff up there? I know, real classic, right? But we're talking about this looming deferral cliff. If you missed my last podcast, I was talking about my thoughts on what would happen in August and in September. And I kind of graze over deferrals. And you can see I've been very passé, that's so fancy, I'm so passé, about what deferrals mean for prices. Because the reason for that is, I believe, realistically, we had deferrals were allowed pre-COVID. You could get mortgage holidays. And yes, there is a huge number of deferrals, but my thinking was, well, why can the government not just extend that? It doesn't cost the banks anything. In fact, they generate more profit because they're able to accumulate further interest down the road. But now I'm seeing headlines like this, and I want to kind of poke at what I think this means for prices and dive specifically into it, because we're starting to get more data on it. So Steve Saretsky's a YouTuber, but he's out of Vancouver. Mortgage deferrals are still inching higher. 760,000 Canadians have now deferred a mortgage payment, representing about 16% of total mortgages outstanding. So that's a good chunk, right? And we've seen mortgage debt accumulating, which kind of appears like, oh, we're growing, like our market is growing, but it's really artificial. It's a lot of people kicking that payment down the road, and with on the tail end of it, meaning that they're going to need to pay additional money in interest. And so we've got this crisis where people are like, they're kind of adding it on, and me too. We're adding it all on to a Rolodex of things that are going to hit us in the next couple months. But I want to focus specifically on this issue right now, this looming deferral cliff. What happens? And I've even said, I've asked the question, can we not just defer? And you've probably heard that before. Can we not defer? Can we not defer? And nobody else is saying that. Well, now that it's getting closer as we expected, now people are asking the question, can we defer? It's almost like we can't see. It's like a new driver. You look like 10 feet down the road. No grandma, I'm okay. But you're not looking 20 feet down the road when you got a school bus in front of you, right? And you've got an accident in front of you, but we got to be paying attention and asking the question, well, should I start turning now? But the way people look at it is they're kind of last minute. It's all like these last minute responses. So here's an article from Financial Post as this conversation begins to happen on the larger scale. CMHC's eyeing new tools as mortgage deferral cliff looms for borrowers. Here's what it says. With a 6-month window for some borrowers to defer their loan payments closing fast, CMHC says, quote, new tools may be needed to help homeowners get through the coronavirus crisis. Well, here we go. Let the conversation begin. CMHC says it has already provided lenders with tools to help struggling households, including deferred mortgage payments for up to 6 months, extended repayment periods, and the ability to add missed payments to a mortgage balance and spread them out over a repayment period. So we've been able to give these banks opportunities to do things, and the government supports them. And the banks are feeling supported, which is why we've seen mortgage rates being able to come back down. But homeowners who decided to postpone repayments back in March may be done or nearly done their payment holiday, which the CMHC suggests may require further action on its part. So CMHC is not sitting on their hands. I think we're overly critical of CMHC because they've been very pessimistic about our market. They're one of the most pessimistic voices, which is a very loud voice in our marketplace, and it has a lot of people shaking their head. Well, early on when I heard those predictions, one of the things I asked was, well, I would kind of rather them be pessimistic, and because they're the ones that are going to be applying things to try and save our market. I'd rather them, kind of take a step to try and fix it, versus if we were optimistic about the market and they kind of missed the fact that there was a problem, that would actually be more concerning. I'd rather them kind of underpredict and overperform. And I think that that's what's happening here because we see CMHC actively making moves to defend what they have already claimed could become a problem. And they said this, quote, as the end of the initial 6-month deferral period from the beginning of the pandemic approaches, we recognize the need to continue to monitor this diligently and potentially develop new tools with our partners to help Canadians during this unprecedented pandemic. The work is ongoing and we will provide Canadians with updates as they become available. And of course, we're getting pretty close on a tight deadline here, so those will probably happen sooner rather than later. But it doesn't mean we can't have ideas of what's coming because they've already put out these questions to a lot of lenders to say, what do you think? Which ideas do you like? They're pooling them to figure out what they're all saying. And based on what they're saying, we can have an idea. We can kind of speculate on what kind of action is going to come. So I will give you an example here. Let's talk about it. So CMHC is obviously aware of that, talking about some of the issues. They're looking at what the options might be. So they interviewed 66 credit unions, it is a survey rather, and some of the financial institutions did not view the 6-month deferral payment for mortgage payments as, quote, sufficient, right? So they're saying it's not enough. They wanted it extended further, 66 of them. Only 15 of them responded, and approximately 22.7% of them surveyed had concerns about the deferrals. So the vast majority of them are asking for extensions, like being pulled by the government. They're saying, extend it, please. And why wouldn't they? Because there's more money for them and you kick the can down the road. And it's not an issue we really want to be dealing with right now, especially given the other ones, which we'll talk about. The survey report also noted that CMHC, which insures mortgages in case borrowers default on the loans, is, quote, considering expanding 4 tools. Here's the tools. Okay. Extended amortization and amortization periods. I think that's actually 2. The former, the extended amortization, likely referred to extending payment deferrals. So that's an idea. Special payment arrangements and adding missed payments to a mortgage balance. Those are the other 2. And that adding payments to a mortgage balance is known as capitalization. But all this to say, whatever idea they come up with, they are looking to do something. And the vast majority of lenders are asking them to do something, these unions. A large majority of credit unions were in the favor of expanding CMHC's default management tools. No option received less than 78.79% support for its expansion. So almost 80% of them want something. And so we got to look to the future and see what's going to come. But you get the idea, guys. For anyone who's been saying we got this looming cliff, right? That's the headlines. We got these looming cliff. We got 750,000 people on this deferral program. And we've had it from our listeners in conversations. A lot of you guys, I know, you're just doing it because you can. Why not? Rainy day fund, build it up, pay that credit card, whatever you're going to do, use the money elsewhere. And that said, there are obviously repercussions if we just were to drop people flat on their face and say, okay, now not only do you have to make your payment, but it's going to be slightly increased from before. Now, the other thing that they're saying is countries like Australia and the UK, they recently took steps to permit longer deferral. So other countries are doing it. So they're saying it's not really a stretch if something similar happens here. And this is why I love not just looking local, but looking outwards gives you an indication of what will happen here. This is why I'm so confident that the evictions thing, as we've seen in Atlantic provinces, is going to be mostly funded by the province. They're going to need to step in. And if they don't, we're going to look really bad and we're going to have ourselves a really big problem. So I sense they will. That said, if Canada were to follow suit, borrowers may need to provide more details. So there's going to be a further process. No free money. Of course, there is free money, but they say there's no free money. Whether that means direct government backstopping of distressed mortgages, leniency of capital requirements, flexibility of lenders, it's too early to tell. So they don't know what that's going to look like, nor are they giving anybody indications. The office, this is an interesting point, of the Superintendent of Financial Institutions, federal bank, they're the ones that oversee the banking, they're the regulator. They said payment deferrals granted during the initial 6 months should not lead to that loan being deemed as non-performing or not being paid back. As a result, banks don't have to hold more capital just because a loan's payments have been deferred. So because you're deferring the payments, it doesn't mean it's not holding the bank back at all in order to be available to make that payment. So they're saying that if we were to continue to defer, maybe we'd have to revisit whether it'd be treated that way or whether it would come at a cost to the bank and needing to hold capital to fund the deferrals. Whatever the details, we don't know. But what I'm sensing very strongly, as I've kind of hinted at months ago, and now it's popping up in front of our faces, is that probably something will happen. And I'm rather optimistic as I hear news like this, that the shock to our prices, as I predicted just yesterday, is going to be minor. It's going to be small. There's going to be a shock. There will be opportunities in there in specific segments, but it's going to be minor for reasons like this. Mortgage deferrals, we're going to extend it. We're going to rework it. Evictions, the government, in my opinion, as I mentioned before, probably going to fund it. Probably going to support that. CERB, we're going to ease off it more likely than not. We're seeing opposition parties talking about don't just cut CERB. And so they're formulating a plan like, how does that work? And I think you're going to get a lot more news on that in the coming weeks as well. And like things like municipalities, big issue. Property taxes increasing and all these things. Well, they've been paid off. They've been given the shut up money. The province gave them a whole bunch of money, especially in Ontario. And it seems to be a non-issue. I've talked with a lot of city workers that are saying, yeah, there's no cuts anymore. Like, we're good. So I believe it's a matter of when people come back to the city. I think that's the main driver of when prices will pick up. And I believe that Trudeau's Liberals and the Ford PCs, they stepped up. They really did step up, and they covered a lot of these issues with the money they gave. Speaking of Trudeau, what do you call a mean criminal falling off a cliff? A condescending. There you go. We'll piss off the Liberals and we'll piss off the Conservatives all in one go. All right. So I want to talk about this idea of rents, right? Like, so if we're talking about, we're kind of hinting about evictions and these issues, and a lot of them are like, there's a lot of question marks in that space. In fact, I think that's even a bigger space to pay attention to than the deferral cliff. Well, I saw an article that came from Blog.to. They say these are the average rents for condos and apartments in Toronto by neighborhood. And they're looking at a report that came from Toronto Rentals and Bullpen Research and Consulting, a July rent report. Now, they did an article. When I was reading this, I'm like, this is different. This is actually different than an article from the same publication that I read a week ago. So I'm going to read you this one, and I'm going to point to where there's a difference, and I'm going to assume both of them are not lying. They're both statistically correct. And so we're actually able to look at where there are opportunities right now in the rental space in our city. So check this out. Average rent prices for apartments in Toronto have been consistently declining thanks to COVID. You guys know about that. And a new report suggests a trend is ongoing in many of the city's neighborhoods. So what this report does is they look at the average rent for all property types, singles, semis, row, condo apartments, rental apartments, and basement apartments in the former city of Toronto, pre-amalgamation boundaries. And they're saying it's down in that area 8% year over year. But when we're looking at the data of average rent for all property types, the market continues to experience declines. However, when breaking down the data by property type, municipality, neighborhood, and project, conflicting results arise. And this is really what we're going to get to, is it's not the same everywhere across the city. Specific pockets are being harder hit. And if I were to kind of break the news, the hardest hit right now, it would seem, would be closest to the downtown core and closest to the former city of Toronto. So here we go. The report indicates that asking rents for single-family townhouses and basement apartment listings on TorontoRental.com actually increased from the first quarter to the second in those segments. But unsurprisingly at this point, condo apartments for rent in the former city of Toronto, also known as Old Toronto, were nearly $260 cheaper per month in the second quarter of 2020 compared to the same period last year. And so this is what they say. Listen to this. When licking the rent, I can't come up with any money. Can I lick you? Oh, whoa. Okay, backtrack. Can I give you a popsicle? And when looking at the average rent for condominium and rental apartments in the 10 neighborhoods in Old Toronto for Q2, rent declines are fairly consistent across the board. As soon as I read that, I'm like, what? No, not true. But I looked at it further and I'm like, you know what? That could be true. So just to recap, they're saying condos and rental apartments, the rent for those in these areas in Q2 in Old Toronto have declined equally. Well, but I remember reading not that long ago that they're split, and I've said it over and over and over again. Well, is it not possible for both to be true? And I think, yes, it is. I think what's happening here is the designated rental apartments in the main city in Old Toronto are still declining and still affected as the condos are. I think where we've seen an uptick for the purpose-built rentals is actually outside Old Toronto. That, in fact, it might be even more so because we're seeing that here they're still down. And it is counter. I'm going to talk to you just briefly on what that is. But here's some of the main neighborhoods and how they're affected, okay? This is in Old Toronto. So the Annex. The average rent for condominium and rental apartments in Q2 was just over $2,560 compared to $2,600 in Q1. And they're saying in the rental apartment space, it's $2,857 in 2009. So they're saying it's been falling equally. Bay Street Corridor, 10% declines from Q2. Waterfront communities, down 10%. Niagara, down 8%. Church Yonge Corridor, 8% down. Little Portugal, 11% down. Mount Pleasant West, 8% down. Moss Park, down 14, the largest one drop, 14% drop, down to just over $2,000, almost $2,100. South Parkdale, down 12%, so crushed. The only area that saw an annual average increase in rent was in North St. Jamestown. And they're saying the reason for that is because there was a high-end purpose-built rental apartment called the Selby on Sherbourne, south of Bloor, that was built that messed it up. And so they're saying it's up 10% annually. So other than that one abnormality, for Old Toronto, rents are down significantly. And the biggest one was Moss Park, which was 14%. There was a condo apartment, the 320 Richmond Street East, called The Modern, which was one of the most active projects in terms of monthly listings in that area, and it witnessed a 20% rent decline annually, that building. So people who are purchasing these new properties and they're trying to rent them out overnight and get someone in there, that strategy is actually messing up certain pockets of our city. According to Myers, the overall declines can be partially contributed to many homes which were previously being used as short-term rentals or short-term units. We know that, and are now hitting the market. Condominium apartment rents continue to experience rent deflation as you get these guys hitting them with the short-term rentals, and 29 condo apartments completions in May makes it the third highest monthly total over the last 3 years per CMHC data. So to say that new construction of condos and apartments and completions is going to be a problem, yes, because it's the third highest we've seen in the last 3 years. And it's a significant portion of those units were purchased by investors and are hitting the rental market. So the rental market will continue to get dragged through the mud. Will it continue to go down a lot? I don't think so. It'll be interesting to see as this month's stats come out what that looks like. But the reality is we do have an influx of condos coming online soon, and it'll make it even more challenging. The real cliff, in my opinion, is not mortgage deferrals. It's on the rental side. And I think we've gone through the brunt of it. But it's like what that German boy said to his mom when he pushed his brother off a cliff. Look, mother, no Hans. All right, moving on. Condos and apartments, they're not the same. And so even though that's the case in Old Toronto, I want to take you back to the article we talked about a week ago just to remind you of what they were saying. Same publication, Blog TO, and this is what they had to say. Regardless of what happens, it's important to note that condo rental apartment rates and purpose-built apartment rentals aren't following the same trend as it stands. That's a quote I read from that article. That's why I was like, what? Okay, so both of these things can be true, by the way, assuming that it's only downtown that is most affected, like in that the purpose-built rentals aren't coming back up, but maybe in the outskirts they are. Condo rents are still plummeting, bringing the overall average down. Actually bounce back, they're saying, for purpose-built rentals, 7.7% month over month. So there you go. So you can see a disconnect. So if I were to kind of summarize it, Old Toronto has similar discounts on rent rates for all different rental types. But outside of Old Toronto neighborhoods, purpose-built rentals are increasing. And based on this, probably even more than I thought, because they have to balance out the losses that they've still experienced in the Old Toronto area. And if you're central, you've been more heavily impacted by COVID, but in the outskirt condos, you've been hurt more. the condos have been hurt more. I think that has to do with rent. Wait a minute. If you're central, you've been impacted evenly by COVID. Oh, I see. So it's saying, this is one of my notes, saying that it lines up. Pretty much the point I just made. It lines up, whereas the condos seem to be hurt more in the outskirt communities relative to purpose-built rentals. Okay, you get the idea. So let's talk a little bit about the market, because it's funny. I just did my predictions video yesterday, and I did not see the stats for July. I actually hadn't even looked at them. I was actually more so going on what I'm seeing activity wise. I'm seeing showing activities kind of coming down a little bit with the listings I've got. I'm seeing like it just seems to be cooling. I'm seeing a cooling. That's the feel I'm getting as an agent, as a realtor in the market. Well, now I'm actually looking at stats the next day, and I'm thankful that I was quite accurate, because I said that I think it's going to be similar. I think that July will be very similar to June as far as prices go. And it seems like it's actually kind of reached a peak, and it's kind of leveling and coming back down. So July, from what I can see as far as change in sales, so we're talking 416 sales. They say sales so far in July are up around 24 over last year, led by a 34% increase in low-rise sales and a 7% increase in condo sales. But I'm looking at a little chart here that shows a percentage, and it was at about, I guess, where were we floating here? Sales. It seems to have peaked now as of the week of July 19th at 19%, and now it's coming back down. So I expect, and based on seeing this, it just affirms what I already believe, that July is it, guys. As we roll into August, it is downwards seasonally, and this is a percentage change too. So this isn't just based on seasons. This is based on market. The same markets year over year during the same time period. If it's coming back down, then regardless of seasonality, you're seeing activity going down. So we gotta be very careful. Just be careful. If you missed my predictions video, go back. I still stand by it. Even seeing the stats now, it lines up almost exact. And we're seeing different things happening, right? We're seeing, as it relates to when are people gonna come back to our city, I see articles like this. Google extends its coronavirus work from home order to summer 2021. They said on Monday that they'll be doing it until June 2021. The change will affect, quote, nearly all of Google's 200 employees. So there you go. There's one office. How about Scotiabank? Headquarter employees to work from home until 2021. Scotiabank will let a small number of head office employees return earlier, mostly in the capital markets division. According to the people with knowledge of the plan, citing directives from internal memo, the remainder wouldn't be back until next year. I actually have family that work at Scotia, and they've told me that already too. And we're seeing it in the news. So if this is the case, are we really going to see a flood of people come back? Probably not until this happens, right? Not until they're able to bring them back, the employees and the work and everything. The life picks up again. It's a really bad time to have a business in the downtown core, especially if you're fueled by, these people commuting into the city. Okay, so condos. Let's talk about condos. Most of the news right now, like the biggest news today that I've saw that I didn't really want to touch on because we talked about it, I feel like I'm killing condos as it relates to price. Like, you guys know there's a discount coming in condos, and I have people freaking out. I have deals in jeopardy because I have people that are relying on selling their condos, and it's like, guys, like, come on. You lined your own client up, and there's probably going to be lawsuits. So it sucks to be you, but we got to be so careful. And the condo segment is getting worse and worse, and I think that trend is going to continue at least for the next couple months, at least. So let's talk about this idea of pre-construction, though. I want to come at it from a different angle to support the news you're reading as you go about your day, assuming you're reading the news. Most of our listeners, I imagine, are, and you come here as supplementary. I want this to be supplementary. I mean, don't take everything I say as the final word and that you're going to run with it. Like, I want you guys to be well thought through, and I know you are because I can see the comments you guys give, and you teach me stuff all the time. But let's talk about condo pre-construction, condo projects, because this is an area I don't work with all that much. Like, if someone wants projects, we have access to all the projects. I can take you wherever you want, but you don't get the stats. It's almost a little more delayed because it doesn't publish with Treb stats. It comes out at a different time. Well, urbanation.com, they have published the stats for Q2, and I want to share with you what's happening. Like, if we were to sit back, I'm going to have you guys guess. Do you think prices are up, down, or the same? Do you think the number of sales are up, down, or the same? And like, where do you think this stands? Again, I'm going to share that with you. Here we go. New condo sales fall to lowest since 2009 recession, but prices and construction move higher in Q2. So there's a summary. Let's talk about some of the figures. During the second quarter of 2020, new condo apartment sales totaled 1,385, and that is the industry's lowest volume of sales activity since the Great Recession in Q1 2009, which was 885. And when you look at the chart that they have on here, it is devastatingly low. Like the number of sales that happened in Q2 are like almost non-existent. It's crazy. But they say this, new condo sales dropped, here we go, 85% year over year. Like that's a huge drop, like crazy, right? And then they're saying, but pre-sale during, which compares to 40% projects. Oh, so new condo sales dropped 85% as only 6 projects were launched for pre-sale during the quarter. So a lot of people were waiting. So when they're saying, oh yeah, no, they're coming online, the builds, which a lot of the mayors are saying, oh yeah, we're still building, they're still coming online. I'm like, I don't think so. Like I see a lot of projects getting delayed. Well, apparently that's the case because there was so few projects that were released and they're coming online now, obviously. Selling prices within newly launched projects in the second quarter averaged $889 per square foot. And they're saying that new launches for the, compared to the new launches for the first quarter of 2020 was $1,159, which reflects a lack of new launches of higher priced downtown Toronto in the Toronto market. So people are taking off those expensive condos. They're like, I'm not going to sell it because builders aren't looking to give you a deal. As a whole, the average selling price for units in actively marketed new condo projects in development across the GTA averaged record high prices, rising 8% year over year, reflecting broad-based increases in selling prices. So just because, similar to the resale market, just because the sales are down doesn't mean prices are down. And when it's being controlled by the hands of so few people, builders, they don't want to give you a deal. Come on. What kind of deal you want? No deal here. I was talking to a builder actually about asking for a discount, and they're like, if I give you a discount, then word's going to get out, and then the next guy's going to ask for a discount. They are, I'm telling you, man, they're sticklers. 90% of all new condominium units in development in the GTA were pre-sold in Q2, rising from 88%. Unsold supply declined 19% and fell 17% below the 10-year average. And despite below-grade condo constructions having been temporarily halted by the provincial government during April, listen to this. There were starts in the second quarter were up 45%. So like beginning the project, not the selling of the project, but beginning of the projects. And that is the second highest level on record behind Q4 of 2019. So again, these pre-constructions, they're going to affect the condo rental market because they're coming online, right? We're seeing new supply coming quickly, actually very, very quickly. And the GTA condo market showed resiliency in the second quarter, albeit at much lower activities. So when I go through the charts, here's what I'm seeing. I'm seeing a significant drop in sales, right? Number of sales is down a lot. Prices are up per square foot on units that were sold. And unsold inventory, there were less units not sold, they're saying, from the unsold. So they're saying, though, in other words, more units have been selling since 2019. And new construction is up for the former TO region, outer 416 region, and the 905. They're all up as far as construction. There's going to be a lot more inventory coming online, which is good. Is it in the proper segment? We will see. This is another reason why I would be not so quick to jump and pull the trigger on a condo because, I mean, there's a lot of construction coming too. We got to really get a lay of the land going into the wintertime. So if you want a deal during the downturn for condos, don't buy a pre-construction. Do not buy a pre-construction if you want a deal. This is the advice I guess I can't give advice. No advice here. That's what I'm doing. I'm not buying a condo from a builder because those guys, they're not freaking out. The assignment sales, they might be freaking out. The people that are reselling, they're definitely freaking out. And I'm seeing forced selling happening, as I kind of tipped there. People in states of desperation because a lot of times people think, they get overconfident in the market and they buy something thinking, you know what, I can sell this. No problem. I can sell this. Well, yeah, until you're firing your realtor because you're trying to close on a property that I sold you. Just be careful out there, guys. Make sure you have agents you can trust that are going to work in your benefit, even if it comes with harder advice, right? Anyways, I'm going to leave it there. I hope you guys are learning great stuff as we continue to track the news. And I'm going to leave you guys with a little bit of humor to start your day off. Here we go. What do you get? We got a sheep, a drum, and a snake fall off a cliff. Anyways, I'll see you guys next time. Have a wonderful day. Take care and keep it real.